Welcome to the chase. You know, we're all running this race. We're all trying to claim victory in it. Think about it like this. All the while you're chasing after something that's good, God's chasing you with something great. Well, hello, I'm Chris McAlpin with The Chase. And I hope that wherever you're going, whatever you're doing, that you're doing something cool, that you're building something great, that you're leaning in, that you're pushing hard. Or maybe you just need a rest. You need to catch your breath. That's okay too. Know that we're here to help you. We want you to win. This show's about making money. And it's about investing. And investing in ways that doesn't hurt people and doesn't hurt the environment. It's also about the chase. That all-consuming drive that we all have for something good. The passion, the pursuit to win, to build, to be creative. But you must know that. All while you're chasing something good. The God Almighty, who loves you, is chasing you with something great. It's God who gives you that passion, that drive, that desire to win. He's the ultimate winner, and He's chasing you with something awesome. And I know, when somebody says something like that, you hear a red flag. They start popping up all over the place. But please listen, we're here to educate. We're here to help people. We want to change lives. This is certainly not a ploy to use the Bible to sell people on becoming our clients. We look at the investment world through the lens of the Bible, which in our opinion, and I think I can make a very good argument for this, is the source of all truth. I'm an investment advisor. Our firm does financial planning, and we manage our clients' investment money for a fee. This is how we make a living. And we and our clients own some of the positions and use some of the methods that we discuss on this show. We're not giving personal investment advice. We can't do that on a podcast because we don't know you. And we don't know your personal goals, your needs, your financial situation. In fact, you shouldn't take any financial advice from a podcast. Education, sure, but not advice. I believe that you should seek investment advice on the securities and the strategies in regards that we discuss on this show to see how they best fit you. Hey, we'd be happy to do that. We want to get to know you. But this show is for educational purposes only. The show's content is our opinion, and it's not an invitation to buy or sell any of these investments. We want to teach you what we've learned through experience, trial, error, gains, losses, and yes, losses. It's not always a popular idea, but losses are a part of life, just like risk. Last but not least, we're not perfect. We're not guaranteeing you positive returns. Past returns, research data, index history, all of those tools that we may use on this show, they don't guarantee future results. Sorry, I can't guarantee the future. That's the Almighty's territory. But we're going to look at God's truths about money, and we're going to look at some excellent ideas. I'm glad you've joined us today, so welcome. Let's get on with the show.
74% of Christians have no idea that faith-based investing is even an option. Faith-based investing is a way to emphatically say no to harming people or the world that God has created. It's also a dedication to not compromise the mandate that God has given us to multiply and be prosperous. Maybe it's something you've been talking about, your spouse, or maybe God has nudged you while listening to this, or you might just want to hear a little bit more about faith-based investing. If you do, and you'd like to speak to one of our advisors, go ahead and go to soundfsg.com/the chase.
Let me tell you a story. This it's a few decades old, but this man was considered a stock trading genius in his day. William O'Neill was born during the hard times of the Great Depression. He was born in Oklahoma, right in the heart of the Dust Bowl. And so he grew up around those hard times. History doesn't tell us much about how he grew up. I don't know. But I know that he started his financial career in 1958 with Hayden Stone and Company. He became a stockbroker. And in 1962 and 63, he parlayed $5,000 into $200,000, going short Corvette, long Chrysler, and long Syntex. And in 1964, he took that money and he bought a seat on the New York Stock Exchange and he formed an investment company. He went on to do some pretty interesting things when it comes to financial education. He started a newspaper in the 1980s. It's still around today. That's the Investor's Daily. He wrote a book, How to Make Money in Stocks, describing his trading style for anyone that wanted to copy it. First off, who doesn't like that title, How to Make Money in Stocks? But I love the idea that this successful investor, who's very successful, also would just freely give away his investment style. And a lot of times when we see somebody just freely giving away their investment style, some red flags start to go up because we wonder, well, if he's any good at making money investing, why didn't he just stick with that instead of documenting how he does it for all the world to see? I think it's pretty cool that he was willing to document it and give it away. And I've actually found that a lot of traders and a lot of investors are that way. They like educating as well. And so it's his CAN-SLIM approach. How about that for a name? To trading stocks that I think this is worth us talking about. And this was his exact formula that he used. But I think that before we get into it, there's two very important lessons that we should look at. Number one, if you want to trade, you want to have a long-term or short-term investing system, you must have a system. Throwing money at the markets and hoping for a profit does not work out well for very long. Typically, that wipes you out. And number two, you can read and study many systems that you want to. Don't have an ego about copying someone else's system. Copy it. Or take it and modify it and mold it into your personality and your risk tolerance to fit your goals. That's extremely important. What do you want to accomplish in investing or in a trading system? What do you want to accomplish if you're trading stocks? It's a question you should ask yourself. But the CAN-SLIM method, let's talk about how O'Neill chose a pool of stocks to invest in. It stood for this. This is an acronym. C equaled current earnings per share. What was the quarterly earnings per share? And they must be positive by 20 to 50% on a year-over-year basis. What this is indicating is the company you're investing in actually growing? That tends to weed out bad companies that are poor performers as a company, but are getting a lot of press and they're running up in the stock market. A stood for annual earnings per share. Kind of the same idea here, but it was two different methodologies. Annual earnings per share must be in the top 5% of all stocks. So the stock and the company had to already be a winner. N stood for new highs of a new high price. This being a pure trend following breakout system, looking for a new high price of that stock, or a new product or a new service that was going to create a buzz and a lot of buyers of the stock. S stood for shares outstanding. This one would need to be modified from Neil's original formula because it was in the 1980s, but he was searching for small to medium companies with that upward trajectory, and so that he could get in on the early side of the trend. L stood for a leader, not laggard, leader. Pick leading stocks with high relative strength values. And that meant pick winners. Don't bet on a loser becoming a winner. I, institutional sponsorship. So institutions like mutual funds, pensions, hedge funds, banks, etc., large buyers that already bought into the company to maintain their portfolio, they're going to be buying more shares in the future. It's always a good sign in a stock. M stood for the market. Study the overall market direction. Move with it. And in my opinion, market price and volume are the best indicators of this. What direction? What's the overall direction of the market? If you want to trade stocks, you want to look at the overall direction of the market itself. And O'Neill's last rule was to manage risk. It wasn't a part of that CAN-SLIM method, but O'Neill used a maximum 7% stop loss on all of his positions. He didn't hold a position long if it moved against him. He cut his losers fast. So how good was he? Well, from the late 70s to the late 90s, he averaged over 40% a year. It was pretty good. Not bad at all. And I imagine that there was some leverage in there, and I imagine that there was some hedging taking place in there as well. But even if it wasn't, he had to have doubled his returns, double-digit returns every year to accomplish that 40% a year. He's good. And if you're interested, you should go read his book, How to Make Money in Stocks. And I tell you what, in this next segment, we're going to kind of dive into another methodology, a simple trading method that you can incorporate. You can listen to, you can study the white paper. You don't have to go try to digest an entire book. And we're going to kind of unpack that. So stick around.
Founded in 2012 as an all-boys Christian school, Delta Streets Academy equips young men by providing Christ-centered, disciplined education. Delta Streets promotes the highest achievement in academics, a competitive athletic environment, and character development. The gospel of Jesus Christ is woven into all areas of the school, believing that glorifying God and serving Him is the foundation upon which all else is built. Delta Streets is becoming locally and regionally recognized as a school that provides the community with productive leaders. We encourage you to learn more about Delta Streets by going to deltastreetsacademy.org.
I appreciate you sticking around. You know, our goal is to educate. We want you to manage the money that God has blessed you with, and we want you to grow it. We want you to enjoy it. We want you to be generous with it. Hey, we want you to reach your goals. We want you to do it in a way that glorifies God. And so that's why we're doing this. So I hope that what we're offering today and in the other podcasts are valuable to us. And you know what? Reach out to us. Shoot us an email. Come to the website and leave us a note and say, the website is soundfsg.com, by the way, and tell us what you think. Ask us questions. Because we're going to get into a simple, repeatable stock trading methodology. But some of those common questions that we get, I want to answer some of those about stocks before we dive in or go further into methodology. One of the questions I get every now and then is, what is a stock? Because we talk about stocks and ETFs, and you hear futures, and you hear options, and you hear bonds. What is a stock? One stock is an individual share of ownership in a company. That's it. When you're a stockholder, you own the company. You don't hold the whole thing. You own one small percentage, whatever that percentage of that one individual share is. That's a stock. But some of the other common questions that we get is, are stocks safe? Well, define safe for me, please. There's a great short white paper written by Longboard Asset Management. And the title of it is The Capitalism Distribution. And they examined 3,000 stocks from 1983 to 2006. And they learned that, and this is important, because not all stocks on the market are created equal, okay? They learned that 39% of stocks were unprofitable investments. They learned that 19% lost at least 75% of the investment. 65% underperformed the Russell 3000 index, which is where this study was pulled from. And 25% of these stocks were responsible for all of the market's gains. So are stocks safe? Well, not if you're trading with hope, not if you're trading with your buddy's hot stock dip or following the crowd. They can be kind of dangerous methodologies there. But they can be great investments when you do your homework and you manage risk. So why doesn't everyone trade in stocks? Think about it. Why, if you hear of these legendary traders, why doesn't everybody do it, right? Well, in my opinion, everyone is capable of trading in stocks, but most people don't want to do their homework. You know what? That's okay, right? Actually, that's why we're in business even, all right? Because people hire us to do that for them, and that's okay. My dad was a builder. He looked at me one time and he said, "Son, you stink at building. I hope you learn how to do something else," all right? We're not all good at everything, all right? And so if you are interested in trading stocks, I want you to do your homework. I want you to vet them. And if you're not, and you're going to hire an investment advisor, you're going to hire an financial advisor, vet the advisor. Learn to trust them. Learn to entrust there and learn their methodologies. But for the most part, people just aren't interested enough in taking the risks involved to learn stock trading. And again, that's okay. It is a risk. It's a big risk. Even after you manage that risk, you still have to learn the nuances of trading. So why doesn't everybody trade stocks? No, they don't want to. Is trading in stocks gambling? I love this question. I want to tackle this question because in the last year, there seems to be a lot of evidence that when the casinos shut down and sports shut down because of the coronavirus. A lot of people move their gambling habit to the stock market. And, first, you can gamble on anything. And so by gambling, I mean betting on chance. And hey, look, I had my own wild youth. I screwed up a college football game or the spread of one, just being young and stupid one time. So I get the gambling side of it, but betting on chance with your money, which is God's blessing to you, is a foolish idea. So is trading in stocks gambling? No, not if you're investing. And hey, look, when I say that gambling's a foolish idea, I'm not talking about your $1 scat game playing golf with your buddies, okay? I'm talking about trading in stocks as to feed a gambling habit. It's a bad idea. Please don't do that. And so, no, stock trading should be a long-term investment where the trader is taking relatively short-term actions. But those short-term actions should be a part of a long-term systematic plan to reach your goals. And so in that case, no, stock trading is not gambling. What is the best way to earn money in the stock market? Well, I think there's a lot of successful answers to this question, okay? Fundamental trading, technical trading, trend following trading, buy and hold if you're doing it right and it's not discretionary. I think that can be an answer. It's not my favorite one, but it can be an answer. It's why we present case studies on the podcast. So here's a short answer to that question of what is the best way to earn money in the stock market. If you want to trade or invest in the stock market, use a proven system that manages risk. A proven system that has research, academic data that supports the system, and you're managing risk at the level that you're allowing for growth to reach your goals, whatever those goals may be. So what are some beginner mistakes that a trader makes? I could write a book on this because I've made a ton of them myself. Rookies don't manage risk. That is the biggest mistake they make. They don't manage risk. When they're putting money in a stock, they're piling in, their position's too big, and they're waiting for it to go to the moon. And when it tanks, they lose their money and they don't know why. Because they're not ever managing their risk and they're not learning a system. They follow what everybody else is doing. Of all the traders I've read about, they all say that's one of the worst mistakes. They don't have a system. And when they do develop a system, they break their own rules. They over trade. Another big mistake, that they feel like they have to be in motion, that motion, it's like going to work. They feel like they have to work to earn that money. And when the truth is, you're letting your investment do its job. Don't overtrade, manage risk. Last question. How to not lose money in the stock market? Don't invest. No, don't invest. But there's no way for me to guarantee you a method of earning a profit and losing zero. It doesn't exist. It just doesn't exist. Now, with that said, you can certainly minimize your losses as you're searching for gains. Here's one way to do it. If you're trading a stock, put an automatic stop loss on that stock. Let's say you use a 15% trailing stop loss. And then that stop loss, you bought a $100 stock, and it immediately got a 15% stop loss, it immediately drops to $85. Whether you're manually following that stop or you're using a computer system to follow that stop, it sells out at $85. Now, market orders, there's a lot of nuances in that, but in a simple explanation, it loses 15%, it sells out. Or your $100 stock grows to $150, and then it loses back to $127.50. It stops out, it sells for you, and it takes your profits. It's minimizing your risks. It's not guaranteeing that you're going to lose zero. That doesn't exist in the stock market. So, historically, what was said in the markets is that you were paid for the risk that you were taking. And that can be true, that cannot be true. But you want to take calculated risks. You want to take wise risks to reach your goals, and you want to manage those risks along the way. And so in the next segment, we're going to dive into a simple stock trading system that can explain one way to do exactly what I just said. So stick around.
But God Ministries shares the love of Jesus Christ through building sustainable communities around the world. They're currently building 3 sustainable communities. The 2 Haitian communities are in Galles-Cambon and Toman, both east of Port-au-Prince, near the border of the Dominican Republic. The community in the Mississippi Delta is in Jonestown, which is located near Clarksdale. But God Ministries operates to build sustainable communities which provide spiritual and physical guidance, water, education, food and housing, as well as economic development, creating dozens of jobs. Learn more by going to butgodministries.com.
All right, so let's look at a stock trading system that could help us realistically answer the question, how to not lose money, how not to lose money in trading, or more specifically stock trading, or what is the best way to earn money in the stock market. And I realize where questions like this come from, and we want to answer them because I'm like, you're like me, or you go Google something, you want an expert, you want to say, somebody just hand me the system, tell me what is the silver bullet that solves this all, and I can go on with the rest of my life. Right? The silver bullet doesn't exist, okay? But we would love for you to have both a financial planning system and an investment system that helps you gives you confidence to manage your money as the resource that God's provided for you so that you can go do other things in life that you want to do. So here you go. This answer is based on a white paper written by Cole Wilcox and Eric Crittenden, and the title of it is Does Trend Following Work on Stocks? Now, the white paper was written in November of 2005. This is updated in 2011. And in this paper, there's a lot of details with supporting documents and extensive tests that they've run. I'm not going to dive into all of those details, but you can go read them for yourselves. I'm using this as an example and educational purposes. I'm not touting this as the best idea or the only idea to trade stocks and be profitable. So before you try it, hence, do your own homework, okay? So this study examined the performance of more than 24,000 stocks, originally from 1983 to 2004. And a second study extended these years through 2008. And they were attempting to identify a trading system, or actually they were attempting to answer the question, does trend following work in managing stocks or investing or trading in stocks? So this is the entry point to these stocks. This is what was required to purchase the stock. It had to be at an all-time closing high. Specifically, got tongue-tied there, the study hypothetically purchased a stock at the opening of the market the day after the highest close. This is trend following at its finest, at its purest, purely following price. It's a breakout system. So you're buying a stock at a new all-time high. And hey, historically, you're told a lot of times you're bandwagon jumping. If you're doing that, you're going to lose your money if you do that. This study demonstrates differently. So you're buying a stock at a new all-time closing high. The exit, because you got to manage risk. Where are you selling the stock? They used a 10 ATR trailing stop loss. Now that sounds very technical. ATR is the average true range that a stock has traded or a position has traded over a period of time. So in this case, they used 40 days. And in that range, just gives you the range of stocks, range of prices on a stock. They used a 10 ATR stop. Simple breakout system, nothing more complicated other than a pile of data that they had to study. And so, what are the results? Over 26 years, this method would have returned a 15.5% annualized return with a max drawdown of 29.3%. That is a big number. That's an awesome trading system. 15.5% on a purely stock trading system. No leverage, no hedging, pure stock trading. I love that system, to be honest with you. And how does it compare to the S&P 500? Honestly, it doesn't matter. I'm going to share with you because it beats the brakes off of it. But it doesn't really matter because you want a system that is going to be successful for you. But how did the S&P do over that period of time? It returned 7.9% annually with a nearly 45% drawdown. So this stock trading system practically doubled the return of the S&P 500 with over a third less of a drawdown. I believe, it's in my opinion, that's an excellent stock trading system right there. And so I'm sure that these authors have now taken that system and they've operationalized it, because it would be very clunky to try to pull from a pool of 24,000 stocks. That's a lot of data. But what this study tells me is that it's possible to have a stock trading system with, in what in my opinion are great returns. You know, what I look for is a stable system that is repeatable. It's going to give you the best returns that you can search for. I personally like trading in stocks and bonds. I don't deal with futures. I don't deal with options. I know a lot of people do, and they're successful at it. You know, there's times to go short, maybe. There's times to use leverage, maybe. But first, I prefer a well-built system that's repeatable. And I think that that's exactly what this gives you. And so, before we go any further, when I look at this, I want to pull, you know, how do you get started? So how could you practically use this? Because I personally don't just buy tickers. I want good companies that do good work and it doesn't harm people and it doesn't harm the environment. I know a lot of traders are very successful just trading tickers. They don't even know the names of the companies they're buying. I personally don't care for that. That's okay. That's their system. So how could you put this in action? First, I would find a pool of stocks to narrow the field that I'm choosing from. And I suggest searching for stocks with long-term dividend growth, earnings per share growth. You can use elements of O'Neill's Canned Slim. And in this case, you could narrow that pool down with both fundamental analysis. You know, what's the macroeconomy doing? Should you overweight international or overweight domestic? Large cap over small? That is, a lot of times that's fundamental analysis. Or could you go with all technical analysis? Purely your choice. You could look at technicals like credit spreads. You could look at technicals like charting and what's going on purely in the charting realm. And so I use Welch-Shield's Biblically Responsible Large Cap Index, which again developed by Welch-Shield. And we're also studying some parameters using free cash flow. But the point is to narrow your choice of stocks to a manageable pool of good stocks. Second, instead of buying at all-time highs, I prefer buying a stock that's above the 12-month simple moving average. This is my entry point. I had a percentage trailing stop loss to manage large risks, and I review the stocks once a month. Now, sell any stocks that have dropped below the 12-month SMA, and I add any stocks that have grown above it. For me, this is manageable. This is a manageable trading system because I have other things to do in life. We've got a firm to run. We have clients to work for. We've got to trade their accounts, which are more important, quite frankly, than mine. And so the point is, in our opinion, you can be a successful stock investor, and we believe that this white paper demonstrates that. Again, the title of the white paper does trend following work on stocks. I also believe that you can and should do this while investing in stocks that do not harm people and do not harm the environment. And then the next segment, I know that this has become very popular. ESG investing has become very popular, and I'm going to talk about why I think that is. So stick around. ESG investing it's developed some serious thought leadership, and I want to dive into that. I'm curious as to why, honestly. More and more people want to do good with their money and not just earn a profit. You know, in the past, I think a lot of people thought that if they invested in companies that were churchy or tree-hugging companies that were hippie and that they were leaving out the so-called sin stocks, that they would give up returns. In fact, I remember reading a book years ago where you could just see how common that thought was. And I remember having conversations where, I remember myself years ago thinking, how much return do you give up when you invested in companies that did not harm people or did not harm the environment? And I got to tell you that the results I found were surprisingly great. And so I believe it's been well proven that you can invest in companies that do not harm people, do not harm the environment, and still get great returns. I got to say, most of the time when I take a portfolio that I've seen and out of curiosity, I screen it through one of our screens just to see what comes out on the other side, 95% of the stocks tend to make it through the screens. Now, I don't have statistics in this particular podcast to support that. I'm just saying from my experience. But why would you want to do this? What is inside of us that makes us consider excluding some companies because they harm people, but they do not harm you, or the harm that they do does not affect us? And I bet even asking that question, why would you consider it, causes some people to kind of knot up on the inside and go, what do you mean? Why on earth would you even question, Chris? Why would you consider this? I love that answer, by the way, because I'm completely for this. But what is it? What is it inside of us that makes us want to do this? I'm going to turn to what I think is a great source for this answer. Let's look at Genesis, chapter 1, the very first chapter of the very first book in the Bible, written 3,400 years ago. And this is Genesis chapter 1 and verse 27. Then God created man in his own image. In the image of God, he created them. Male and female, he created them. I want to back up one verse. Verse 26. Then God said, let us make man in our image, according to our likeness. Let them rule over the fish of the sea and the birds of the sky and over the cattle and over all of the earth and over every creeping thing that creeps on earth. And I think that gives us three spectacular points that starts to answer this question of why do we feel this need to invest in something that does not harm people. I don't want to profit from pornography. Pornography leads to sex slavery, all right? I don't want returns on that. In fact, it pisses me off, okay? And why? What is that inside of me that makes me want to do that, or inside of you? Maybe you have another topic that really riles you up and that you do not dare want to profit from. I think this is the answer right here. It's number one, we're made in God's image. We're the only creatures on earth made like this. Clearly, we're special when you look at other creatures in creation, right? We have a growing intelligence. We have a wisdom. We have a soul. And this also means, made in God's image, means that we're made to represent God on earth. We're not gods. Don't misunderstand me. That's not at all what I'm saying, okay? But we're made, I've heard this description, we're made like the statue of a president or like the statue of a king. That when in history past, the king would have his statue all over the country representing him, demonstrating who was in charge. And it's almost, that this is kind of a good comparison there, I think, that we're made in God's image representing him, that he's ultimately in charge and we are his stewards. And so that's the second point. We were made to rule the earth. Everything on earth was originally under our authority. We were made as God's stewards. We don't own it. We didn't create it. It's not ours. We manage it on his behalf. We're stewards of the earth. And since God is good, he cares for his creation, and we're made in his image, we were made to be good. We were made to care for creation. Now, hey, don't get me wrong. Our sin has screwed this up. Go listen to any news show for 5 minutes and you'll see how bad our sin has screwed this up. I don't think anybody wants to argue that one. That's a totally different podcast. I got to stop right there. But still, it's in our original design to be concerned for other people. And it's in our original design to be concerned for the environment. Now, we might disagree on how we do this, but the original design is still inside of us, which is why social ESG, environmental, social, and governing, in governance investing is popular, which is why Christian ESG is becoming popular. Biblically responsible investing, faith-based investing, socially responsible investing, all of these impact investing, these are becoming popular topics because as our wealth grows in America, we're starting to see I don't want to profit from harming people or harming the environment. And I believe that becomes from the original design that is inside of all of us because we're made in God's image. That's cool, okay? Now, how might you carry this out? Well, let me give you one way. This is one way. First, there are ETFs, there's mutual funds, there are investment models built around these. At Sound Financial, we build investment models that are completely Christian ESG, completely faith-based investing. You can go to our website, soundfsg.com/services/faith-based investing, and you'll find a bunch of resources on this topic. But let me say, on this topic of trading today, how might you do this? So let's assume you've narrowed down your pool of stocks to a manageable number. Remember, you're looking for that top 25 that the capitalism distribution paper references. Next, you screen for the stocks in a positive trend. Maybe you use the 12-month simple moving average. Once you get that pool that you want to invest in, I suggest, this is one way I do it, you can use Inspire Insight's Christian ESG screening tool. It's a public source. If you're going to use it on a monthly basis, there's a relatively small monthly fee to use it. You can screen the companies, and you can look on that screening tool of Inspire Insight to see what their definitions for every one of their screens are. Hey, in full disclosure, there are no perfect companies. I'm not claiming that. Inspire Insight's not claiming that. You can find warts on every one of them. But you would now be left with companies that you could confidently say or feel like that they do not harm people and they do not harm the environment, and those stocks are in a positive trend. You could start trading them, you could manage your risk, you could develop a system, and it's not any more complicated than that. I think a lot of times when we get into this, I feel like I have to give some great ending, It's really that simple. But I think this is a method that you could be excited about. You could seek to earn a great return using well-researched methodologies, and you're not profiting from companies that are doing bad work, right? But only good companies doing good work. Good luck. Let us know how we can help. Call us anytime. We're trading nerds, we're investment nerds. We love to have this conversation. So please feel free to reach out. Take care.
For disclosure and citation information, please go to www.soundfsg.com/disclosures.